When most people think about dividend investing, they may imagine a really painful, slow burn when it comes to making profits. It's not necessarily the sexiest way to make money in the stock market. But as someone that has been investing for 6 years as of May of this year, I can really say that dividend investing is my favorite, and I feel like the easiest way to make passive income on top of the income or potential income that I make from the share price growth, all with investing $25 to $30 a week over that period of time. So in this video, I'm gonna go over with you guys all of my investing history, including some of the mindset behind the decisions that I made and how much I made in dividends for every single year and overall. I made my very first investment on May 14th of 2019 for Groupon after receiving a reward for Groupon a few months back after opening my Robinhood account for the first time. At that point, I literally had no idea what I was doing. I wasn't making any YouTube videos when it comes to dividends. I wasn't making YouTube videos at all. And I lacked the consistency of investing into my portfolio altogether. I didn't pick back up until September. And at that point, I started buying stocks pretty rapidly. That include positions like Bank of Nova Scotia, Stag Industrial, Ford, and Coca-Cola. Coca-Cola, by the way, was the very first dividend stock I ever bought, so it kind of holds a special place in my heart. And by the end of 2019, with only 4 months of investing, I made $14.13 in dividends, or about $3.53 per month. At that point, I was under the impression that I wasn't gonna make a lot in dividends, especially with what I could contribute, but that mindset really started to change over time. By the end of 2019, going into 2020, I started to make more of my investing decisions based on what other finance YouTubers said, which isn't necessarily the worst thing as long as you do your own due diligence, your own additional research, and understand what you're doing before you invest into it. And of course, that's not what I did at all. I got lucky. I made some good decisions, including investing into ETFs like SPHD and QYOD. But of course, I have room for bad decisions like Tortoise Acquisition Corp. I was really into SPACs. And for those of you that may not know, SPAC stands for Special Purpose Acquisition Companies. And the whole purpose of a SPAC that's in the stock market is to get other companies that want to be in the stock market into the stock market via a merger / acquisition. Tortoise Acquisition was the very first SPAC I ever invested into, and it eventually merged with a company and converted itself into a semi-truck EV company called Hyliion Holdings. I ultimately regretted this position. I lost about 80% of my investments within this company over the past 4 to 5 years that I held on to it, but I'm just glad I got rid of it. During this year, I also realized that dividend stocks with a high dividend yield weren't necessarily the best, but I realized that from a stock price perspective. I sold out of positions like Invesco Mortgage Capital and Orchid Island Capital, both with really high dividend yields, but over time, both showed a negative trend when it came to their share price growth. And in hindsight, I eventually noticed that their dividend yield between then and present time had dropped by an average of 20% every single year. So that's definitely not something you want to invest into over the long term. By the end of 2020, or my very first full year of dividend investing, I made $77.87 in passive income, or about $6.49 per month. That was really cool for me, especially in comparison to 2019, but I was really excited to finally hit that $100 per year barrier. So in 2021, I wasn't 100% all in on the dividend yield, so that did leave me some room to make some pretty good investing decisions. And of course, it left me some room to make some bad ones. I got into 2 SPACs, one called Forest Road Acquisition that eventually merged with a company called the Beachbody Corporation, and another one called Torchlight that eventually merged with another company called Metamaterials. If you are one of those rare people that are watching me to this day and that were watching this channel years ago, you would know that I made a ton of videos about Metamaterials. I was so into this stock, I'll be honest with you, partly because it got me a lot of views on YouTube, and that's not great at all. And that showed me that wasn't great, because in the long term, that position did terrible. I don't even think you can invest into it anymore. But on a good note, I made my first initial investment into some very important companies in my portfolio to this day, including Apple, SCHD, and Nvidia. As a matter of fact, Nvidia has brought me the most money, unrealized gains, but the most money regardless out of any position that I hold to this day. And by the end of 2020, I made $144.68 in passive income, or about $12.06 per month. I basically doubled my earnings when it came to the previous year, and that was the motivation I needed to continue into investing, even though at that time I was only investing $25 every single week. So towards the end of 2021, Mark Zuckerberg and Facebook changed their name to Meta and introduced all of us to the metaverse. That significantly increased the popularity of metaverse and AI related stocks leading into 2022. That obviously persuaded my train of thought, and I bought into positions such as AMD, Matterport, and SOX, which is a semiconductor ETF. AMD worked out pretty well for me. I eventually sold that. SOX, the ticker symbol for the semiconductor ETF, is another position I'm still holding. It's doing really well. Matterport, on the other hand, not so much. By the end of 2022, I made $189.19 in passive income, or $15.77 per month. In comparison to 2021, that put me at about $40 more in annual dividends, which wasn't amazing, but it was definitely a nice step in the right direction. 2023 was the year I started to transition more into long-term dividend stocks, or stocks that have a positive long-term share price and dividend growth history. But on top of that, I started the mission of cleaning up my entire investing portfolio, which at the time was probably 50 stocks and ETFs deep. That led me to selling positions such as Hyliion, Body, and Metamaterials finally. That was convenient because SPACs had started to make a nice downturn during that period of time, and all those positions had been taking me on an unfortunate roller coaster for the past couple of years. So it was nice letting those go. And with the $25 a week I was investing, on top of the profits or losses or leftover money I made from selling those positions, I used that money to invest in other companies such as Home Depot, Costco, and Realty Income. Now, by the end of 2023, I made about $257.74 in passive income, or $21.48 per month. Also, towards the end of that same year, probably around November or the beginning of December, I increased my weekly deposits into my portfolio from $25 to $30 every single week, which made a really huge impact, and that's how much I'm investing into my portfolio today. Last year, I got a bit more aggressive with selling positions that I felt didn't support the goal I had for my entire portfolio. That included selling some ARK fund positions that I invested into, on top of ChargePoint, finally Matterport, and a position called Solid Power. A lot of speculative plays. And speaking of those positions, over the past 5 years, ChargePoint and Solid Power did very terrible. And I'm not even sure what happened to Matterport. ChatGPT says that, at least as of last year, they became a penny stock, but I couldn't even find the stock details on Google, so that sucks. Those changes gave me more financial opportunity to add new positions to my portfolio, including Williams-Sonoma and Hershey, but also add to some additional positions that I already had, such as Realty Income and QILD. And by the end of last year, I had made $331.32 in passive income, or $27.61 per month. And that's really exciting for me because I'm almost at an average of $30 every single month in passive income. And if I get there, that's essentially adding an extra 12 weeks of deposits into my portfolio, since I only invest $30 every single week. So if I hit that goal, whenever that happens, that'll be awesome. Throughout the past couple of years, the goal I have for my portfolio slowly shifted from passive income to building one that will give me long-term share price growth opportunities. Regardless, almost every position I have is still a dividend paying position. It just doesn't necessarily have to be the highest yielding. It still has some importance to me, so I still track how I'm doing every single year, including how I'm doing all together. So with that being said, since I bought my very first dividend stock back in May of 2019, up until now, I've made a grand total of $1,140.42, or about $16.77 per month. On top of that, my portfolio has grown over 40% all time, which, even though I've seen better days, is still crazy. What's even better than seeing how I'm doing right now is seeing what I could potentially be doing in the future. So I like to see, as far as dividends go, where I could be at in the next 5 to 10 to 15 years. And this information is based on if I stopped investing $30 a week and I just relied on the dividend reinvestments. In 5 years, my portfolio would pay me $561 per year. 10 years, it would start paying me $880 per year. In 15 years, $1,414 per year. Of course, this is based on a 6% annual share price growth, which is based on how I'm doing now. I actually rounded down a little bit, but this is amazing. I'm still working on making changes to my portfolio to this day, just trying to make sure I'm in positions that give me more of an advantage of share price growth history while I'm fairly young, being in my early 30s. And as I get older, I'll eventually shift that into investing more into higher dividend yielding stocks to increase my passive income. My portfolio, I feel like, has done great. I'm learning a lot in comparison to the very first day I started investing, and I know there's a lot more I need to learn, so I'm really excited about that. The 6 years have been amazing, and I'm really excited to see what the next 6 years could look like. One thing I am looking at, again, is modifying my portfolio. I was actually suggested that based on the amount of money I'm investing every single week, my portfolio should be a lot smaller. So with that thought in mind, I made this video giving you guys and myself an idea of what a portfolio of maybe a couple of ETFs or a couple of dividend aristocrats could look like and how they compare to each other. So if you have time, make sure you check out that video. I appreciate you guys watching this one. And until next time, as always, take care.